Hello and welcome to our rating review of the Warrakirri Ethical Australian Equities Fund, currently rated recommended by Zenith with a responsible investment classification of integrated. The objective of the fund is to provide investors with an ethically focused, core Australian equity strategy that is quality biased and benchmark unaware. The fund is managed by North Cape Capital and distributed by Warrakirri Asset Management. Formed in 2004, North Cape is an Australian-based manager that specialises in managing concentrated equity funds and, as at 31 July 2024, managed approximately 14 billion Australian dollars, of which 3 billion is in their core Australian equities strategy. The fund is managed using a multiple portfolio manager approach with a team of 4 portfolio managers and 2 senior analysts. For additional insight and support, the team can draw upon North Cape's broader resources, which includes an emerging market equities team and a global equities team. While each portfolio manager is given a high level of autonomy, the team, who are based in Sydney, feel they share an overarching investment philosophy. All the team members are responsible for stock research, allocated along sector lines. Zenith considers the team's collective experience to be a key strength relative to peers, given that the average length of tenure of the portfolio managers is over 16 years. North Cape adopts a long-term investment approach underpinned by fundamental analysis. The team aims to invest in high-quality companies with sustainable growth profiles at relatively attractive valuations. While the fund places a strong focus on environmental, social and governance considerations, it is also managed under a proprietary ethical overlay provided by Warrakirri, which incorporates both positive and negative screening aspects. Zenith believes the independent screening arrangement maintained by Warrakirri ensures that the fund remains true to its ethical investment mandate. The fund's mandate is relatively unconstrained, although consideration is given to stock liquidity, and the team typically invests in companies with a minimum market capitalisation of $1 billion. North Cape aims to identify companies with characteristics that include sustainable competitive advantages, strong balance sheets, quality management teams, high return on capital, and large, growing investable markets. North Cape's research effort begins with an ESG assessment covering a wide range of issues. This can include environmental aspects such as opportunities for environment-targeted products or avoiding potential for liabilities from pollution, social issues such as child labour risks or workplace health and safety, and governance issues such as board structure and accounting disclosure. North Cape combines its ESG research with detailed company research that addresses more traditional areas such as industry of operation, competitive advantages, financials, leadership, valuation and risks. Findings are debated amongst the team, with unanimous support required for a stock to be placed on North Cape's approved list, which typically sits at around 70 stocks. While the portfolio managers can have different investment approaches, companies must be selected from the approved list. Warrakirri's investment committee is responsible for the fund's ethical charter. Consistent with the fund's ethical mandate, companies that operate in certain industries that are deemed to be having a negative impact on society, and specifically where a company has revenue greater than 5% in excluded business areas, are removed from the investment universe. Warrakirri also encourages North Cape to invest in companies that demonstrate more sustainable practices, business models, or offer products and services that advance the transition of the Australian economy to one that's more sustainable. Zenith believe North Cape's ESG assessment effectively focuses the team's research effort on companies that have limited downside risk and fits well with the broader investment approach. This analysis acts as a cornerstone of the investment process, and we believe that this qualitative analysis of a company's business is crucial on a forward-looking basis, given that ESG considerations are increasingly being reflected in share prices. Overall, Zenith believes that the security selection process is robust and that the research conducted by the team is comprehensive. The fund is constructed via a multi-portfolio manager approach, with each portfolio manager being responsible for their own sub-portfolios with approximately equal allocations. Position sizing in each sub-portfolio is agnostic to benchmark weights and driven by the portfolio manager's views on the discount to intrinsic value of a stock, with those trading at highest discounts held at the largest weights. Each manager's sub-portfolio will hold a maximum of 25 positions. Given the relatively narrow approved list of approximately 70 stocks, there's often a high level of overlap between the sub-portfolios. If the overall position count exceeds 40, the smallest positions in the sub-portfolio with the most holdings are removed. Zenith has a favourable view of the strict position count limit, as it ensures that meaningful positions are held in the fund. Positions are generally sold due to views regarding valuation, change of investment thesis, prevailing judgment, or being displaced by a more attractive opportunity. Typically, portfolio turnover is expected to average between 30 to 40% per annum over the market cycle, consistent with North Cape's long-term investment approach. The fund aims to exceed the S&P/ASX 300 accumulation index by 2 to 3% per annum before fees over rolling 3 to 5 year periods. As at 31 July 2024, the fund has achieved its performance objective over a 3-year timeframe, outperforming the benchmark by more than 2% per annum and ranking within the first quartile amongst Zenith's peer group over that period. The fund has typically achieved stronger outperformance in falling markets, which we see as consistent with the fund's investment approach. Also, Zenith notes that the fund has delivered greater upside capture relative to downside capture over this period, which we view positively. Prior to April 2020, the fund was operated by a different manager, so the full performance track record is not representative. However, we note that North Cape's core Australian equity strategy has a strong performance track record dating back to 2005, providing us with additional confidence in the robustness of the investment process. The fund's management cost is 0.77% per annum with no performance fee, slightly higher from a peer relative perspective. The fund is not expected to exhibit a particular style bias over long investment timeframes. Zenith notes that the permanent portfolio exclusions and a generous risk budget may result in the fund producing a more volatile risk-return profile than its benchmark. While the fund may be held as a standalone Australian equities exposure for investors with higher risk tolerances, we believe the fund would blend well with other style-neutral, growth or value-orientated domestic equity products to achieve a more diversified exposure. This concludes today's review of the Warrakirri Ethical Australian Equities Fund, rated recommended by Zenith. If you'd like any further information on the fund, please refer to the Zenith or Warrakirri websites. Thanks for watching.